Hello students, in our previous lecture we are start to study unit number 3rd, that is conversion of partnership firm into limited company. In our previous lecture we are studied meaning of partnership firm, then meaning of conversion, meaning of sale, difference between conversion and sale. Then we studied a computation of purchase consideration, meaning of purchase consideration, then division of purchase consideration, payment of purchase consideration, methods of purchase consideration, as well as accounting treatment in the books of partnership firm. Okay, in our today's lecture we are going to study the accounting treatment in the books of limited company. Here model journal entries. Okay, so first transaction is given for assets and liabilities taken over. The entry will be sundry assets account debit to liabilities account to purchase of business account. Here amount of PC. Okay, amount of PC, amount of PC. Okay, PC means purchase consideration. So sundry assets is taken over by the company, account debit to liabilities taken over by the company at agreed value. Okay, at agreed value means the agreed value of assets and liabilities which is taken over by the limited company, and then to purchase of business, that is amount of purchase consideration. Okay, so first entry in the books of limited company is to take over the assets and liabilities. Okay, for take over the assets and liabilities, entry will be sundry assets individually, sundry assets account debit at agreed value to liabilities account agreed value to business purchase account amount of purchase consideration. Okay, then second entry for payment of purchase price. Okay, so payment of purchase price, business purchase account debit. Okay, here payment to the in the form of shares, debentures, whatever. So business purchase account debit. Okay, it means the limited company has purchased a business of partnership firm and give a purchase consideration in the form of shares, debentures, and remaining balance in cash. Okay, so business purchase account debit. Okay, what limited company has purchased? So business purchase from partnership firm, so business purchase account debit. Here discount on issue of shares if given, if discount on issue of shares is given by limited company, then we consider here. If discount on issue of debenture, if discount is given to the debenture holders or the debentures for payment of purchase consideration, the discount is given on the debenture is also taken here, that is discount on issue of debentures if given account debit if given to what the limited company has give to the partnership firm to share capital give to share premium. If shares are issued at premium, then we consider the share premium here. To debentures account, to premium on issue of debentures account, if debenture is issued at premium, then premium should be taken into consideration to cash or to bank account. Okay, so don't be confused in this entry. The limited company has purchased the business of the partnership firm, and the entry will be the business purchase account debit, because what limited company has take over, the limited company has take over the business of partnership firm. So business purchase account debit amount of purchase consideration. Okay, here amount of purchase consideration into bracket amount of PC means amount of purchase consideration. If the limited company has issued a shares at a discount, then share discount is also taken into consideration. If debenture is issued at a discount, then discount on issue of debenture should be taken into consideration if given. If not given, then we make entry without considering the discount. Then to share capital, if share issued at premium, then we consider here premium. Debenture to debenture, if debenture are issued at premium, then we consider the premium on debenture. To cash. Okay, so here we the limited company has take over the business of partnership firm and paid a amount in the form of share capital, in the form of debentures, and in the form of cash. Okay, so here the second transaction is for payment of purchase consideration or purchase price. Second entry. Then third entry, when a company issue its shares to public for cash, it means limited company has issued their shares for a general public. Okay, then entry will be so here issue of shares to the general public or to the society, then the company has received a cash. Okay, because he sell the shares in the market and received a cash. Okay, so cash comes into the business, so cash account debit to share capital account is the simple entry. Okay, if shares are issued at a discount. Okay, if shares are issued at a discount, then cash account debit, discount account or discount on issue of shares account debit to share capital account, to share capital account. Okay, it means the shares are issued at discount. Now shares are not issued at a discount. Okay, in current era or in current situation, the shares cannot be issued at a discount. Okay, then if shares are issued at a premium, shares are issued at a premium, then entry will be the cash account debit to share capital account to share premium account if given. Okay, then next entry will be when preliminary expenses if any are paid by the company, then the entry will be preliminary expenses account debit to cash or bank account. It means expenses account debit and cash goes out from the business, so expenses account debit to cash account. Okay, so these four entries or four accounting treatment is in the books of limited company. Okay, so we make the four entries. Okay, remember these four entries in the books of limited company. Now we are going to solve a practical problem number or example number first on conversion of partnership firm into limited company. Here example 1 or problem number 1 is given. The Kiran Limited was formed to acquire the business of A and B, who shares profit and losses in the ratio of 2:1 respectively. Okay, the balance sheet of A and B was as under as on 31st March 2020. So the current limited, sorry, so the here current limited is the company. Okay, here Kiran, sorry, not Karan, here Kiran Limited, Kiran is the company, limited company, and Kiran has acquired, Kiran has take over the business of A and B, that is A and B is the partnership firm or A and B are the partners. Okay, and Kiran has take over the business of A and B. A and B has sharing profit and losses. So here profit and loss sharing ratio is given. Profit and loss sharing ratio is given here. Okay, profit and loss sharing ratio of AB partners, that is 2:1 respectively. Okay, so profit sharing ratio of A and B is 2:1 respectively. The balance sheet of A and B was as on 31st March 2020. So balance sheet is given, okay, as on 31st March 2020 of AB partnership firm. Okay, so here first of all we read the liabilities. Okay, so here capital account A rupees 64,000, B rupees 40,000, total capital 1,04,000, then Mrs. A's loan 3,200, then sundry creditors 21,600, then bills payable 7,200. Okay, total of liability is equal to 1,36,000. Then asset side, on asset side goodwill is given, goodwill rupees 8,000, land and building rupees 40,000, machinery rupees 20,000, sundry debtors 30,000 in inner column, less RDD 1,400, in amounting column 28,600. Okay, so total sundry debtors is 28,600. Then stock rupees 24,000, then investment rupees 4,800, then cash at bank rupees 10,600. Total of asset size is rupees 1,36,000. Okay, so total of assets and total of liability are equal or are tally. Okay, so 1,36,000 is the total of both sides, that is liability as well as asset side. Here additional information is provided, that is it was agreed by the company. Okay, here it was agreed by the company. It means the company has to agree. It means the company has to, Kiran company has to agree to take over the assets at book value with the exception. Okay, with the exception means the Kiran company has take over the business or take over the assets of the partnership firm at book value, except land and building and stock which were taken over at rupees 45,000 and rupees 20,000 respectively. It means land and building and stock are taken over at agreed price, and agreed price is given, that is land and building is taken over by Kiran company limited, amounted rupees 45,000. Okay, 45,000. And stock was taken over by the Kiran company limited for rupees 20,000. Okay, so here the agreed value of two assets is given and remaining all assets are taken over at book value. So remember here, so additional information is given, it was agreed. It means the Kiran company has agreed to take over all assets of the partnership firm at book value except land and building and stock. Land and building and stock were taken over by the company for rupees 45,000 and 20,000 respectively. The investment were retained the investment were retained by the firm and sold by them for rupees 4,000. It means the investment is not taken over by the company and the investment is with the partnership firm, and the partnership firm is sold the investment for rupees 4,000. Okay, so remember this additional information that is relating to the investment is sold by the partnership firm, amounted to rupees 4,000. Okay, so here cash is comes in the business, so cash account debit to investment account, but here we cannot say the investment account because we transfer this investment in realization account. So entry will be cash account debit to realization account. Okay, that is cash account debit into bracket investment sold. Then this also discharge the loan of Mrs. A. It means the loan of Mrs. A is discharged, which is paid. Okay, it means liability paid. Okay, liability paid, then entry will be loan account debit to loan account debit or repayment of loan. Okay, repayment of loan, then entry will be realization account debit. It means the liability is paid. So remember the entry for paid of the liability, the entry will be the realization account debit to cash or bank account into bracket repayment of loan. into bracket repayment of loan. Okay, then the company took over remaining liabilities. Okay, so here only Mrs. A's loan is paid and remaining two liabilities of the partnership firm are taken over by the Kiran Company Limited. Okay, so here we read the information. Then again here information is given, that is the purchase consideration was fixed at rupees 1,24,200. It means purchase consideration is also given in the problem. So here no need to calculate the purchase consideration of the partnership firm. Okay, so here purchase price is given, so it is very easy to solve the problem if purchase consideration is given in the problem. Okay, now we start to solve the problem. We have to prepare only a here prepare a realization account. Okay, so here we only prepare a realization account in the books of partnership firm. So here solution, in the books of partnership firm, that is A and B firm. Okay, A and B firm realization account, realization account then prepare a 4 column, that is particulars on debit side, particulars rupees, and on credit side particulars rupees. Okay, debit credit, prepare a 4 column, that is particulars rupees, Okay, here particulars rupees, particulars, then rupees, particulars, then rupees. Okay, particulars rupees, Okay, here first entry, that is transfer of all assets to the realization account. Okay, remember the accounting treatment in the books of accounts. Okay, again we revise here by for solving the problem. So first transaction here in the books of partnership firm, first entry is transfer all assets to realization account, then entry will be, so realization account debit to, sundry assets. Okay, sundry assets. Okay, sundry assets, we transfer assets individually. Okay, we transfer assets individually, and when we transfer the assets to the realization account, we transfer that assets at book value. Book value means the value which is given in the balance sheet. Okay, so here first asset which is given in the balance sheet, that is goodwill. Okay, so goodwill rupees 8,000, transfer the assets to the realization account. Okay, transfer the assets to the realization account at book value, goodwill. So here we transfer goodwill, that is into bracket book value. book value, or we directly put this book value in front of sundry asset. It means we transfer all the assets at book value to the realization account, amounting to rupees 8,000. Then next one is next assets is given in the balance sheet, that is land and building. Okay, so land and building 40,000, land and building, land and building 40,000, 40,000. Then next assets, that is machinery, 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 machinery amounted to rupees 20,000, book value, book value 20,000. Then next one is next asset is sundry debtors. Now here book value of sundry debtors is rupees 30,000. Okay, book value of sundry debtors is rupees 30,000. Got it? Because here the RDD is deducted from the book value, we get a net sundry debtors, but here we transfer the assets at book value, so sundry debtors is transferred by book value amounted to rupees 30,000. Okay, so here sundry debtors, sundry debtors, sundry debtors, sundry debtors amounted to rupees 30,000. Then next one, next asset is stock, stock amounted to rupees 24,000, 24,000. Then next assets, that is investment, that is investment, that is investment, investment rupees 4,800, 4,800. Then next that is bank or cash at bank 10,600. So here we transfer the cash balance, cash at bank, that is 10,600. Okay, so here we transfer all the assets to the realization account at book value. Now second transactions or second entry, transfer all liabilities to realization account. So entry will be sundry liabilities account debit to realization account. So here we transfer the liabilities on the credit side of realization account. Got it? We transfer all the liabilities of the partnership for on the credit side of realization account. So here by sundry liabilities into bracket book value, BV means book value. So here book value of sundry liabilities is given. Okay, sundry liability is given. First liability given in the liability side of the balance sheet, that is Mrs. A's loan. Okay, A's loan is liability of the firm. So here Mrs. A's loan, okay, Mrs. A's loan amounted to rupees 3,200, 3,200. Then next sundry creditors is given, creditors. Okay, so amount of creditors is rupees 21,600, 21,600. Then bills payable is given, that is 7,200, bills payable 7,200, 7,200. Got it? So here we transfer the liabilities to realization account. Okay, we transfer all the assets and all liabilities to the realization account. Now we start to solve the additional information which is provided in outside the balance sheet, okay, which is provided in outside the balance sheet. So here it was agreed by the company to take over the assets at book value except land and building and stock. So all these agreed value we consider while making accounting entries in the books of limited country, limited company. Okay, so agreed value should be taken into consideration when we make a accounting treatment in the books of limited company. Okay, so second adjustment is very important for the partnership firm, that is, as investment is not taken over by the company, so the investment is sold by the partners. So entry will be, it means investment sold. Okay, sold, so cash comes into the business. Okay, so cash account debit to cash account debit to, sorry, here one effect is remaining about the RDD. So here we separately transfer the RDD. So entry will be the we transfer the RDD with transfer of liability. So entry will be the sundry liabilities account debit to realization account. So here RDD is remaining, we forgot the RDD. So here by RDD amounted rupees 1400. Then we sold out the investment. So investment sold, it means cash comes into the business, it means cash account debit to realization account, because the investment is sold on account of realization. So by cash or bank account into bracket investment sold, investment sold amounted to rupees 4000, amounted to rupees 4000. Here second effect on the cash account debit side to realization account, but here we did not prepare a cash account. So only one effect, that is cash comes into the business on account of realization, because sold out the investment amounted to rupees 4000. Okay, then next one is the purchase consideration. So entry will be for purchase consideration, but here after we recording the purchase consideration on realization account, here additional information is given, that is the loan of Mrs. H is repaid. Okay, so loan of Mrs. A is repaid and remaining liabilities is taken over by the company. So loan is paid, so liability is paid, the entry will be liability paid, the entry will be realization account debit to. So here entry will be realization account debit to bank or cash account, to cash or bank account into bracket loan repaid, loan repaid or repayment of loan, repayment, loan repayment amounted to rupees 3200. Okay, 3200, got it. Then next, okay, so we consider here all the additional informations which is relating to the realization account. Now purchase consideration. So purchase consideration due and purchase consideration received are the two entries for purchase consideration. So first of all, we make entry for purchase consideration receivable. It means purchase consideration due from the Kiran Company Limited. Okay, due means which is receivable, not received. Okay, not received, which is receivable. So show the entries. So entry will be who gives the purchase consideration. So Kiran Company Limited has paid the purchase consideration for takeover the partnership firm. So entry will be the Kiran Company account debit. Kiran Limited account debit. So entry will be Kiran Company account debit by Kiran Limited, Kiran Company Limited account into bracket PC means purchase consideration, PC due. Okay, amounting to rupees 1,24,200, amounted to rupees 1,24,200. Okay, 1,24,200. Okay, then second effect on the debit side of Kiran Company Limited account, that is to realization account 1,24,200 into bracket amount of PC due. But here we only prepare a realization account, so only one effect is given on the realization account on credit side of realization account, that is purchase price is receivable from Kiran Company Limited on account of realization. Okay, so make the total and find out the net profit or net loss. Okay, so here credit side is more than the debit side, so total is 1,61,600 is the total of credit side. Put this total on the debit side, 1,61,600, and find the difference, and that difference is called net profit transfer to. Okay, so all profit is distributed among the partners of partnership firm as per their profit sharing ratio, and profit sharing ratio is given in the problem, that is profit sharing ratio is 2:3, that is here, that is 2:1, and profit is, so here profit is 21,000. Okay, so here we get a profit 21,000, profit is equal to 21,000. Okay, so this 21,000 is transfer, that amount is called to net profit. Okay, transferred to, where we transfer to capital account, as per profit sharing ratio. So 21,000 divided by 3 multiplied by 2, so 2, that is 14,000 profit, is transferred to age capital account, 14,000, and B's capital account 7,000. Okay, got it? So here we prepare a realization account. You understand the preparation of realization account. It is not hard to prepare a realization account. We prepare only realization account, and we transfer all assets, we transfer all liabilities at book value, then we sold out the investment, then we paid a loan or repay a loan, okay, then transfer a purchase consideration or make a entry of purchase consideration due or receivable. Okay, so very easy, we prepare only one account. In our next lecture we solve a second problem, and in second problem we prepare all accounts, that is realization account, new company or Kiran company, or a purchasing company account debit, or partners capital account. Okay, we prepare all the accounts and solve the practical problem on conversion of partnership firm. First of all, understand how to prepare a realization account, how to make the ledger posting. Okay, we already discussed the accounting treatment, accounting or model journal entries. Okay, so that journal entry is posted on the respective ledger accounts. Okay, so here we studied the preparation of realization account. In our next lecture we solve a practical problem, problem number second, on conversion of partnership firm into limited company. And in second problem, in second example, we prepare all the ledger accounts in the books of partnership firm. Okay, thank you very much.